Hi, I'm Phil Grande, philsgang.com. Welcome to my presentation on what is going to happen. Everybody asks, what's going to happen? I'm going to tell you that in a few minutes, okay? Now, anytime during this presentation, if you want to join my gang free for 10 days, go to my site, philsgang.com, and sign up where it says Get Started Working Investor Group, where you get my chart free, color-coded chart free, and you get your membership free for 10 days. All right, let's get started. We know the stock market crashed in 2008. We know the economy collapsed in 2008. But before we talk about that, how do you get stocks to go up? How do you get the stock market to go up? Most people don't know. Well, what you do is you have the Federal Reserve print money. Anytime you have a correction in the market or a crash in the market, you have them print money, okay? Because you want them to take that money and you want to get them to buy all these bonds, treasuries, so to lower interest rates. Because that means interest rates will go down on your car payment, your student loan, and everything else you do normally. But they also want interest rates to go down because they're going to give interest rates, very low interest rates, to the companies so that they can do business investment. Because from business investment, your earnings grow, okay? You have earnings grow. In other words, the more you produce, more productivity you have, the more earnings you have. And then what happens is from productivity increases, wages increase, consumption increases. Because if you have more wages, you're going to consume more. If you consume more, remember, consumption is responsible for 72% of our economic growth. Also, money goes into banks, which means they lend to startup, which is the backbone of our economy. Startup businesses, they create 80% of the businesses. So the key is to make sure that the Fed prints money and they provide to the companies for business investment to keep the wages going, consumption going, and new startups. But they decided, our owners, who, remember, owned a great deal of these stocks that were failing, these companies that were failing, and they decided to do something else. They were going to print the money, and instead they were going to give the companies the money to reduce the amount of shares. Now, why is that? Well, the more earnings you have, you spread them over the amount of shares you have, your earnings go up, and so does the stock price. But if you're not doing a good job and you don't have many earnings, and then when the quarter comes, you got to spread those earnings over your 15 million shares, and you don't have enough, then your earnings go down and your stock price goes down. Well, they didn't want that to occur right after the crash going to the first couple of quarters because there was no earnings. They didn't want to start the crash all over again, so they decided to cheat. Instead of taking the money and giving it to business investment, giving it to the companies to create earnings, create productivity, to increase wages, increase consumption, increase the banks, increase the new businesses, they decided to just, hey, keep buying your own stock. Keep dropping the amount of shares you own, so when you have lousy earnings, your stock price will still go up. Because as long as you got fewer shares and you're spreading those earnings over fewer shares, then your earnings are going to go up, your stock price is going to go up. And Congress said, well, that's a felony. Well, no more. Reagan stopped that. He says, that means your stock market is going to be going up for the wrong reason because you're only reducing your shares. You're spreading lousy earnings over fewer shares. That's the only reason why the stock market's going up. It's not going up because of a good growth or earnings. That's bad. Oh, we'll do it for 18 months, they said. So for 18 months, they started to do that. Stock market started to go up. The banks went up like 160% in about 2 months. And then when the 18 months came, they said, all right, let's stop. And they said, no, because the 1 percentile and the 1/100th 1% are making a fortune. And they don't have to worry about companies making profits anymore because they keep giving them money to reduce their shares. And as long as they keep reducing the share, they don't need earnings. They have enough earnings to keep the stocks going up with the earnings going up. So let's keep going. But there's a problem with that. All that money that's going to the companies to buy their shares back, it's all borrowed. And don't forget what else they're doing. The consumer's not making any money. So how are they consuming? They're borrowing. So by 2012, you have consumer household debt through the roof. You have corporate debt through the roof, and the national debt going through the roof. Why? Because we're not creating enough jobs to produce enough tax revenue for the Treasury. So now we got the biggest debt in history. By 2012, they started to push the economy down. In other words, our economy was not growing anymore. We were stuck here at 2.9%, remember. At 2.9%, that's where you were. It never grew. But the stock market kept going up 400%. But the economy stayed at 2.9%. 2012, now our GDP was not growing, and our earnings of companies were not growing. But the stock market kept growing, and that's all they cared about, as long as the stock market kept growing. But by 2018, we had our first little crash. Remember, 2018, we went down about 20%. Then they papered that over by doing more what? Stock buybacks. So the stock market went back up again. And remember what they kept saying. They kept using as a narrative. Oh, we're signing with the Chinese. We're signing with everybody buy. We're signing with the Chinese. Well, by February 2020, this debt was piling up. But not only the debt, our national debt, the debt over the global economies, because everybody was doing the same thing we were doing. So now the global debt was huge, $262 trillion. And guess what? China wasn't contributing to the economy anymore. Their economy was dropping. And all the global economies depend on China providing them materials to build buildings, materials to build airports, build cities that nobody lives in. And our economy, we were in debt $22 trillion, and we're not growing. We're at 2.9%. So just like what happened in October of 1929, when there was a surprise crash, remember? They had that one day, they had that October 29, a surprise crash. Same thing happened to us February, I think it was February 24th. We had our drop. And there we are today. So now our market has collapsed, going down to 30, all because of the greed that nobody ever cared about taking the money, putting to business investment so you could grow wages, grow jobs, grow consumption, grow banks. So what's going to happen? Well, what's going to happen now is remember, this stock market, this crash was just an extension. Remember, the crash never ended. All this propping up was all this free money, all this money to keep dropping the amount of shares you had, all the stock buybacks. All it did is stop the crash temporarily. And now we're continuing on our way down again. We never fixed the economy the first time. And this is all Bush's fault and then Obama. So now they're going to try to do it again. So now what they're going to do is try to start another bubble. We had the dot-com bubble, then we had the housing bubble, and now we had our QE bubble collapse. Now they're going to try to start another bubble. Now they got the Fed printing $6 trillion, okay, and they're going to start doing the same thing all over again. Instead of taking the $6 trillion and give it to companies for business investment, they're going to take the $6 trillion, and the same thing, they're going to tell us they're going to use it to stop the virus, which they are, some of it. Remember what they said in 2008? They said when they printed their money, they said we're going to use most of it to help the households. We're going to do TARP and HARP, and we're going to help people not go into foreclosure, which was a lie. Most of the money ended up going to stock buybacks, right, to reduce the number of shares so the stock market will go up fake, but it will go up. They're giving us the same song and dance again. They're going to take most $6 trillion and they're going to help put it towards the virus. No, they're not. A lot of it is going to go towards, once again, here we go, print this money, drop interest rates, keep on lowering the amount of shares companies have. So when they don't have any earnings, they got fewer earnings. It's easier to spread few earnings over few shares. So make sure the stock earnings don't go down and the price don't go down. It'll keep the stock market going up. That's what they're going to try to do. But it's not going to work this time. Not going to work this time. Because everybody knows the stock that was at $25 over here went to $225 up here. It was all fake. And then it dropped in the last couple of weeks down to $185. And when they announced this package, they said companies can't do stock buybacks. Who the hell's going to buy stocks? They know this $185 stock was any worth than what it was in 2008. Because remember, all the stock was pushed up, the price pushed up, all fake. So the problem is, without having used this money to do stock buybacks, they got to keep reducing their amount of shares, and they can't do it. They just can't do it. And that's the problem right now. So who's going to buy these shares that are overblown when there's no stock buybacks? Remember, on the way up, nobody cared the stocks were overpriced. Called climbing the wall of worry. As long as they knew, everybody knew, the institution, everybody knew that the Fed would be there to keep printing money, to keep reducing rates. That's all they cared about. they would still buy stocks, called climbing the wall of worry. They didn't care how bad the economic news was. They could care less as long as they had confidence that the Fed was in control and they're going to keep doing what they got to do, push stock prices up. Well, guess what? They can't do that right now. So we're going to have to see in the next month, are they going to not use that money for stock buybacks? Are they going to lie to us and use it for stock buybacks? That's the big key. Nobody knows. If they don't use it for stock buybacks, then it's a real problem. Then this market's going to continue to test the lows, and we should go lower. So the question is, are they going to keep printing money to help the virus, and they're going to keep their word? No longer can they use it. Companies give it to companies that keep dropping their prices down so the stock price goes up artificially. How are they going to get their prices up? They're going to do it the old-fashioned way, through earnings. How are they going to do that? The economy was so damaged over the last 12 years. That's what we got to see. So my guess is the stock market, they're going to try to move it back up a little bit, but it's going to be very, very difficult, and I think we're going to go through the lows. But even if they go up first with my charting, okay, my color-coded chart, it tells us when money is going in, when money is going out, and that's what you follow. You don't follow the BS listening to the fake business news networks. You follow the money, and that's what we're good at. And here's the other thing. You got to always know how to make money when the stock market goes down. 75% of the people lose money in the market because they don't know when to get out, and they don't know how to make money going down. To learn that, go to my site, philsgang.com, for the free trial for 10 days. And remember, a lot of people keep asking, I just wish I had somebody. I don't want to go to class. I don't want to learn anything. Just somebody that says, here's when you buy, here's when you sell, tell me to get out, tell me when to add. I don't want to learn anything. Just tell me, okay, here's the stock you got to buy. I wish I could just find somebody like that. That's what we do here at Phil's Gang. Okay, we'll see you on the charts.